A few weeks ago, for the very first time, people started to say the words, but only very briefly, that we're in a Goldilocks economy. When the second quarter GDP print was released at 2.1%, people said, boy, this is better than we thought, and inflation's better than we feared at the beginning of the year, and unemployment's down, and I mean, we're getting close to a Goldilocks economy. What is a Goldilocks economy? First and foremost, this phrase was created by analyst at Solomon, David Schulman, in 1992, and the articulation at the time was that 4% GDP growth and 3% inflation with maybe 3.5% unemployment wasn't too hot, it wasn't too cold. Just like Goldilocks, it was just perfect to keep the bears at bay. And that was what was deemed Goldilocks economy, and that phrase was coined as that kind of set of numbers. Now, we're not there right now, but the US economy is growing. It's growing at a 2+% number. Inflation is that 3% number and on the way down, and we could debate that. That's a whole different topic, but the underlying leading indicators of inflation are showing that the inflation continues to go down. The core parts of inflation are continuing to fall. The input costs are continuing to fall. We're not going to reverse the inflation of 2022, but we're not adding inflation at the rates we were. We're adding inflation at 3% kind of number and falling. Unemployment remains low in the 3.5% range, and this gets pretty close to that Goldilocks world. The interesting part to me is that articulation of Goldilocks lasted about 3 days, and then people started reverting to all of the wall of worry that they've been reverting to every few months since the market bottomed, domestically and globally, at the beginning of October 2022, and the nearly a year positive run since then, led by high-quality growth stocks. The feature of that low sentiment, coupled with a near Goldilocks economy, not a Goldilocks economy, but a near Goldilocks economy, is one that should lead to positive surprise ahead. As people continue in the month of September to look for how central bank policy will be terrible, how things aren't working well in China, how everything about politics is bad, how inflation ticked up just a little bit at the headline level, and doesn't that portend terrible things and worse Federal Reserve activity ahead, and. The fact that we're near Goldilocks world and surprises in the real economy keep trending on average, not perfectly so, not 100% so, better than people expected, that we should hit that Goldilocks world in a world that doesn't expect that and recognized its potential as a Goldilocks for only about 3 days. Yes, I think that should warm your heart. I think this speaks further to this reality. In December of last year, we had a corrective downturn inside this bull market that lasted a little over a month. In February, March of this year, we had another one. Recently, we've had another one in the period of August, September. And it would appear this one to look almost identical to those prior two. And I encourage you just to go back and look at a chart over the last year at some online website that allows you to do that for, let's say, the S&P 500, and see how similar this period looks to those periods before the bull market ramped back up. I think this is the corrective phase as the wall of worry that bull markets legendarily climb reasserts itself to lower expectations. It's the corrective phase, the pause that refreshes, if you will, before the launch of the next phase upward in this bull market. And in that next phase upward, I would expect us to hear more 3-4 months from now about the Goldilocks economy, as things are getting better irregularly when people don't expect them to. Thank you very much for listening to me. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.